Hello friends, welcome to my YouTube channel. In this video you are going to learn accounts receivable. Chapter I have discussed are what are account receivable, example of account receivable, what is the account receivable turnover ratio, benefit of account receivable and disadvantages of account receivable. What are the account receivable? Let's start the video. The word receivable refers to the payment not being completed. This means the company must have extended a credit line to its customers. Most businesses sell to their customers on credit. That is, they deliver the goods and services immediately, send an invoice, then get paid a few weeks later. Businesses keep track of all the money their customers owe them using an account in their books called account receivable. The total amount of account receivable allowed to an individual customer is typically limited by a credit limit which is set by the seller's credit department based on the finance of the buyer and its past payment history with the seller. You can locate account receivable under the current assets sections on your balance sheet. Account receivables are classified as an assets because they provide value to your company. An example of account receivable include an electric company that bills its client after the clients received the electricity. The electric company records an account receivable for unpaid invoice as it waits for its customer to pay their bills. Account receivable turnover ratio. Now come to what is the account receivable turnover ratio. The account receivable turnover ratio shows you how fast your customers are at paying their bills. We calculated by dividing total net sales by average accounts receivable. Let's use the imaginary company XYZ Incorporated Financial for the year 2020 as an example. Let's say that on the 1st January of 2020, XYZ Incorporated had total accounts receivable of 2500. Let's also say that the end of 2020, that December 31st, its total account receivable was 1500. It also had total net sales of 60,000 for 2020. To get the average account receivable for XYZ Incorporated for that year, we add the beginning and ending accounts receivable amount and divide them by to calculate the account receivable turnover ratio. We then divide net sales, that is $60,000, by average account receivable $2,000. This means XYZ Incorporated has an accounts receivable turnover ratio of 30. The higher this ratio is, the faster your customers are paying you. 30 is really good account receivable turnover ratio. Benefit of AR. Benefit of account receivable. Allowing more credit to customers can expand the number of potential customers for a business, resulting in an increased market share. But if some of them are paying you late or aren't paying at all, selling to them could hurt your business. Late payments from customers are one of the top reasons why companies get into cash flow problems. One of the best way to keep track of the late payments and make sure they aren't getting out of hand is to calculate the account receivable turnover ratio for your business. Disadvantages of AR. Now move on the disadvantages of account receivable. There are several risks associated with the carrying a large account receivable balance, including uncollected debt. High accounts receivable that goes uncollected for a long time is written off a bad debt. These conditions occurs when customers who purchase on credit go bankrupt or do not pay this invoice. Cash flow deficiencies. A business needs cash flow for its operations. Selling on credit may increase revenue and income, but it offers no actual cash inflow. In the short term, it is acceptable, but in the long term, it can cause the company to run short on cash and have to take on other liabilities to fund operations. If you find the video helpful, give us a like, share the video and don't forget to subscribe my channel. Thanks for watching this video.